All right, guys, let's get down to it. Try to make you a little bit of cash. We are, after all, trying to make you money. Edward Life Sciences, I had last year. It was a juggernaut. We made big-time money on it in a short period of time. It's pulled back more recently, but I love it. Listen, execution's been phenomenal. They've beaten the street 4 out of 4 times. Now, I will put this up front. It's not cheap from your traditional valuation metrics. If you're talking PE of a 28, PEG ratio over 2, but the sales were up 13%. Gross margins went from 72% to 77%. Operating margins from less than 15% to 27.5%. And that was with a higher tax rate, okay? It's a heart valve company. I love these heart valve companies. I followed them all for a very long period of time. Also what they call hemodynamic monitoring, vascular surgery. They've given pretty good guidance, so I'm comfortable where the stock is right now from a risk reward point of view. And they've also been in and they also have been, and we're all getting older. And they've been in a rumor mill here and there. You never buy a stock for that, but it's a good cherry on top sometimes. Steve, what do you think of this one?
Well, I will say, to Lori's point, that we're getting old. Our entire society soon is going to look like a constant replay of the show The Golden Girls. So given that, I think medical devices in general are great, but I don't know the specifics. But I'm sitting next to a man who does know biotech far better than I, so he can probably speak to.
I love the sector. I've loved it for a couple of years now. I think it's got at least another run higher. And this is a good stock on a pullback that should hit all-time highs next 2 quarters.
What do you make, though, in general, though, that everyone keeps saying, most mavens and the Federal Reserve chairwoman, that biotech is overbought? But then you see these deals where there's huge premiums, a lot more than the AOL premium.
Well, so first of all, I don't think the chair of the FOMC, any of them, have had a really good track record of timing stocks or sectors of the market. That's number one. And number two, you know you're at the beginning of the bubble when everybody says it's the peak. So for me, anyway, in biotech, you still have the real bubble coming. Bubbles last longer, and they go farther than anybody ever imagines. And I think that's where we are at biotech.
You know that venture is really behind life sciences, right? Venture, like Google Ventures, very into life sciences. Steve Maris, who's like, we're going to live to 500 years old.
That's where everything is going. Yeah. That's where everything is going. And you know what? To live to those levels is not just eating kale. We might need a little bit of tweaking here and there.
You know, it's a great company that you're talking about because of what they do, you know, with the heart valves and trying to longevity of life.
And they make money.
Well, they make money. And actually, the price to earnings is priced right now, not based on forward, but on trailing. So I like the price. But I would put it more in the risk side of the portfolio, not the value. And you know, you're looking for some invention, something innovative to come out of this company,
or for them to keep taking market share. But I like what you're saying because of valuation. Good point. By the way, I want to thank Dan. I really appreciate it. Paul, Dietrich, want to say thanks. Really miss you guys, and have to get you back real soon. Now, the war on police. First of all, it's never going to work because without them, there's no justice for any of us. And without no justice, there's no stock market, there's no America. We got to think about what's going on in this country. I know we're in a difficult time. We're going to talk about it when we come back.